If I just had 3 minutes to explain to someone just how insane the modern system of economics really is, there would just be one graph I would show them. This graph is the total amount of assets on central banks' balance sheets over the last 10 years. Now, what is interesting and is obviously very clearly visible is that for the last 10 years, there's just been a massive expansion, going from around $6 trillion in 2008 to around $19 trillion by the end of 2018. So let's explain what this really means. Starting in 2008, in the aftermath of the global financial crisis, in order to keep the financial system alive, central banks around the world began a monetary expansion policy which became known as quantitative easing. Essentially, what the central banks were doing was buying up as many financial assets and securities as possible in order to raise the prices, stabilize market liquidity, and basically prevent a complete collapse of the global financial system. After they purchased these assets, they then got chucked onto the balance sheet, and so this is a visual representation of all these newly purchased assets by central banks. Now, the curious person would ask, where do the central banks get their currency from? And when you understand the answer to this question, the graph makes a whole lot more sense. See, the difference between normal people and central banks is that central banks have magical powers. See, when I want to purchase something, I have to save up my money, I'll work a job, and then I exchange the currency I earn to buy it. When central banks want to purchase something, they click computer keys on their magic bank computers and then magically generate the digital currency required to buy what they want. This is because central banks have the monopolies on the creation of fiat currency. So if you understand this, and when you look at the graph in this context, you can see that the central banks have been on a massive purchasing spree, buying up as much as they can, and when they are purchasing these assets, they are also increasing the currency supply. Also, let's put these numbers into perspective and realize that this is an increase of over $13 trillion. That's $13 trillion worth of real assets that now belongs in the hands of the owners of the central banks. And to me, it's completely unfair. You know, the system's rigged, and in my mind, it's theft, plain and simple. Now look at this. Although it may seem like nothing, this tiny little decline at the end of 2018 is extremely interesting. Although it could just be a small dead cat bounce before the central banks shoot off again, this small decline could also be a signal that the central banks are switching from an expansionary policy into a contractionary policy. And when the central banks begin selling the assets on their balance sheets, what happens is they release the equity of these assets back onto the market, allowing private purchasers to exchange their fiat currency for these assets, but then what happens is that money is pulled out of circulation, and that is when you get deflation. Now, deflation could be an objective of the international banks. We know that central banks coordinate their monetary policy globally. People such as Naomi Prinz have extensively documented this. They get together at places like the Bank of International Settlements and they manage the global economy. So in my opinion, if you understand what this graph really means, you're well on your way to understanding just how insane the modern monetary system really is. And as to what are the alternatives to the central banking system, well, that's a topic for another video. I'm Sam Hansen, and this is the Critical Thinkers Society.